Yeah, hello and welcome to another update video about Bitcoin. Yeah, Bitcoin chart today, a slight consolidation. Bitcoin chart hasn't moved at all, fighting with the $44,000 level, but is consolidating above this previous, you could call it breakout point, but really it's just a pivot, an important pivot, an important level in this current cycle. It's the 43K level. We talked about that at length in previous videos. Price is consolidating above it at the moment. The wave counts are still valid that we talked about in the last few days and actually weeks on this chart. So the primary scenario would be the white wave count, where we have a 1-2-1-2 setup. We're basically now in the third wave of a third wave, a very aggressive rally, then a fourth and a fifth and so on. You know, this is sort of the wave count that I'm currently going with primarily. I will have to change my view below 34K. You know, we've got our level here. That's really all we have. It's quite simple. That 34K level is the 50% retracement level of that rally to the upside. And that really tells us when the white wave count will be invalidated and a deeper pullback is unfolding. Well, where that deep pullback lands, that is going to be a challenge to determine. Why? Because we're dealing with a B wave. Okay, so it's either the white wave count, which is preferred also from a trading point of view, I think, because it is fairly clear, okay, and it will give us only shallow pullbacks, and these shallow pullbacks can be very clearly defined because it's typically the 50% retracement level of a third wave. That's the support. But in the white wave count, until we get to the bull market high, we shouldn't get any deep pullbacks. That's a very, very important realization you have to have. That's the white wave count. Now, is it guaranteed to play out? Of course not. You know, we also have the yellow wave count, which is the next likely alternative. Fairly close together, those probabilities, yeah. But even if we get a pullback in yellow wave B, it could still be a bullish scenario, okay? It will just mean much more messy price action into all-time high territory. So, but we can distinguish them quite easily by just checking the 50% retracement of the last rally. And if that level breaks, it definitely increases the risk that this is a B wave pullback. Where could that B wave pullback land? Well, we take the length of the entire move to the upside of the 2022 low. And generally, I mean, B waves can be extremely shallow, and that's the challenge. Can't exactly overshoot to the downside, but B waves can be very deep as well. So that B wave ideally would not break below $19,500 roughly. We can refine that a little bit more when we should that scenario unfold. I just want to mention to you what the key levels to watch are in that scenario, that you can, you know, understand and have a bit of a roadmap in case the 50% Fibonacci level breaks. Then we're dealing with support in the region between $19,500 and basically, yeah, $30,000. Again, very large area, but that's due to the extensions and also due to the fact that B waves can be very, you know, they are variable. They can be very shallow, they can be very deep, but we will probably be able to make it a little clearer as we get there. How would I treat this scenario? Well, I would probably be buying, you know, I would from a trading point of view and mindset point of view, I would treat such a pullback as a gift. It will just be much more difficult to probably get a really good understanding of the microstructure as we move higher, because it's going to be a C wave then, which is going to be difficult. But yeah, I just want to make you aware again of the two scenarios, also for anybody who's new on this channel. There are only two main scenarios I'm tracking. I'm tracking many more in the background, but I really try to keep it nice and simple here for you. And yeah, so at the moment, however, in the short term, prices should move higher. Not will, but should. Okay, so current price action still suggests further trend continuation into the area between 50,000 and 65,000 before even starting a pullback that goes into this region. At least that's what I assume right now. Now let's take a look at the shorter time frame wave count, because here it seems like that we are still on our way, you know, towards that $50,000 level plus. And at the moment, it's, well, at least there is a likelihood of another high before we start that deeper pullback into that area here of around 34K. Well, 34K is really only the maximum that pullback should do in wave 4. It can also be less deep, shallow, 36K, or even 39.2K. That's the support zone. A break below 34K, however, will assume that, or will make me assume that this A wave I just showed you has already topped. Until then, I assume only shallow pullbacks. It's quite straightforward. Looking really at the microstructure on the 1 hour chart, a pullback should not go below $40,400. Well, if it does, then we're likely in this larger degree fourth wave, okay? So it's really just on the 1 hour chart here between these two support levels as well. So it's always like, we track a micro support. If that breaks, the next one will become relevant. And on the daily time frame, we've got that as well. On the daily time frame, we basically only have this one that I just showed you. And below that, we're dealing with a B wave pullback probably. So that means at the moment, primarily, that's the primary wave count, we should still see another extension higher in this third wave. Next sort of target Fibonacci area is between 46 and 47K. Could go higher, yes, but that means only shallow pullbacks going higher. Then at some point, that fourth wave and the fifth wave, that is how the move to the upside would look best as per, basically the microstructure. Now again, microstructure, there are many options, okay? So, the more micro we go, the less predictive a wave count is. To keep it nice and simple, you can simply use the 34K level as key support to distinguish between the two scenarios. Not everybody needs to be aware about the micro structure. Okay, if you're trading the larger time frames, which is often a little bit more profitable, you don't need to deal really with the microstructure. In the very short term, really there is nothing to add to my previous videos from today and yesterday. Still consolidating here, very slow price action. This could still be a high B wave, but we only have 3 waves down, so very, very unclear where exactly we are here. Important to understand, this is support. As long as support is holding, one more high is absolutely preferred, and it should get into the region around 46 to 47K next. And yeah, this could be a high B wave, but it could also have started wave 5. If it's wave 5, this could be an ending diagonal. So that's the explanation why it would look corrective, because we only have 3 waves up so far. But yeah, that's all the clarity we can get from this chart at the moment. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. You can find the links for those channels in the description. Thanks a lot for watching. Bye-bye.